The strongest evidence the government can put together that's very persuasive in front of a jury is several years worth of tax deficiencies. In other words, there's the tax you reported on your tax return, there's the tax you should have reported, and between the two, there's a deficiency, a difference, an understatement. The strongest evidence they can also provide is what caused the deficiency. If they can put direct evidence in front of the jury, in other words, they can show specific transactions that led to an understatement of tax, and they can cast a doubt on your credibility by doing that, they'll do that. The government has several indirect methods of establishing the tax deficiencies. We're going to go through those now. One indirect method the government can establish a tax deficiency is to calculate your net worth at the beginning of a tax year. Calculate your net worth at the end of a tax year. Figure out what the change in your net worth was. Figure out what the cost of your living expenses were for that year. The cost just for you to exist. If you got kids in private school, if you got a house that's 1 block from the beach, if you're driving a Maserati, if you own an airplane, they can do the math on what all that cost, and then they can compare the beginning and ending net worth for a year, figure out what the increase in your net worth was, figure out what it costs for you to live the lifestyle you've lived, and extrapolate a tax deficiency. The amount of income you reported on your tax return versus the amount of income it would have taken to live the way you lived for that year and to increase your net worth from its beginning value to its ending value. The government will take into consideration non-taxable sources of income during that year. Maybe an inheritance came in that year, that would be non-taxable. Maybe you went out and borrowed money in that year, that would be non-taxable. The government will figure this in and determine a deficiency anyways. The expenditures method is basically a cost of living test. This method focuses on the cost that it would take to cover your personal living expenses. This is readily determinable by looking at your debit cards, your credit cards, every type of financial statement that comes through your home, your banking activity, and the government can tell what it costs for your lifestyle. Plus, you're interviewing you, observing you. Since one possible source for you to cover these expenditures is wealth acquired in a previous year, the government will also incorporate the net worth test in making this determination. In other words, what was your net worth at the beginning of the year? What was your net worth at the end of the year? What were your expenditures for the year? They'll come up with a tax deficiency in that manner. The government will also look at any assets you purchase in that year. What did it cost for you to acquire the assets you acquired in that year, to live in the manner you lived, and to change your net worth from what it was at the beginning of the year to what it was at the end of the year. Here's a method that I've seen used in every audit I have ever been a part of. It's called the bank deposit analysis. The government will take all of your accounts, whether they be brokerage accounts, savings accounts, checking accounts, any type of an account, and they will add up the deposits into all of those accounts for the year, and that represents your income for the year. They'll compare that income per these other source documents to the income you reported on your return and look for underreported income in this manner. All it takes is $10,000 of unreported income for your case to be referred from a civil auditor to a technical fraud advisor. There's 2 of them in California. Their sole job is to determine whether to pass on that referral to the Criminal Investigation Division to take your civil audit and ramp it up into a criminal tax investigation. If this happens, you won't hear from that civil auditor anymore. They will just disappear. I do a whole video series on when do you know that your civil audit has turned criminal. You might want to see that one. The government routinely uses this same methodologies with entities such as LLCs, partnerships, and corporations as well.